Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohanar Pingre, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to the video series What Law Says, Indirect Tax, GST, and today is part 9, and we are going to discuss case laws reported to High Court under GST law. So let's dive into it. Let me allow to share my screen. What law says? Indirect tax part 9. We are going to discuss case laws reported to High Court under GST. Let's start. First case. Directorate General of GST Intelligence versus Rakesh Kumar Goyal 2025, Delhi High Court. Date of order is 27th June 2025. Let's understand facts and issue of the case. The respondent, Rakesh Kumar Goyal, was alleged to have availed what input tax credit through fake invoices and claimed IGST refunds on exports, causing a revenue loss of about rupees 61 crores. He was arrested. Bail was denied twice initially, but after the charge sheet was filed, bail was granted by the Chief Metropolitan Magistrate. The prosecuting authority petitioned the High Court to recall the bail. So issue was whether the bail, once granted after the filing of the charge sheet, could be recalled simply because the investigating agency objected without showing risk of absconding, tampering with evidence, or influencing witness. Let's see what Delhi High Court observed and held. At the stage of investigation before charge sheet, factors like cooperation in investigation or presence for questioning matter. After the charge sheet is filed, the critical factors shift to the triple test. What are the triple tests? A risk of flight or absconding, risk of influencing witnesses, risk of tampering evidence. The case rested primarily on documentary evidence. There was no indication the respondent would abscond, tamper evidence, or influence witness. So the High Court dismissed the petition to recall the bail. It held that once the charge sheet was filed and bail granted, the prosecuting authority must show one or more of the triple test risks to justify the recall. Since no such risks was shown, discretion exercised by CAMM was proper. Next, Tamilnadu State Transport Corporation Limited versus Additional Commissioner of Central Tax 2025, Madras High Court, date of order 14th March 2025. Relevant section is 73 subsection 1 of CGST Act 2017 and Rule 88B sub Rule 1. Let's see facts and issue of the case. The petitioner is a state transport corporation engaged in providing what public transport services. Due to technical glitches in the GST portal and issues with the digital signature of its managing director, the petitioner could not file its GSTR 3B returns for the period July 2017 to July 2019. Very interesting case. Despite delaying filing, the petitioner deposited the exact output tax liability each month into the electronic cash ledger on or before the due dates. It is a main important factor to decide the case, because what even though there is a delay in filing the GST returns, the petitioner is doing is depositing its exact output tax liability on each month-to-month basis, and that is also before the due dates. So the department issued a show cause notice proposing levy of interest under section 50, read with section 73 subsection 1 of the act, based on the delay in debiting the electronic cash ledger, which occurred only when returns were filed late. Whether issues were under consideration, whether interest liability under the CGST Act arises when the tax amount is credited in electronic cash ledger on or before the due date, but the actual debit via GST or 3B filing is delayed due to what technical issues, and whether Rule 88B Sub-Rule 1 of the CGST Rules 2017 applies such that interest ceases from the date the amount is credited into the electronic cash ledger. Let's see what Madras High Court observed and held. Rule 88B Sub-Rule 1 provides that if any amount is credited in the electronic cash ledger on or before the due date of filing the return, but is debited later when filing the return, and such amount shall not be taken into consideration for computing interest for the period during which it was merely lying in the ledger. The court termed the proviso clarificatory in the nature and thus applicable even retrospectively. That is, it doesn't matter whether earlier or later. The petitioner had deposited tax timely into the electronic cash ledger. The delay in filing the returns was due to genuine portal or digital signature issues. So the court quashed the demand for interest insofar as it related to the period after the deposit into ECL and before debiting the ledger. That is, the interest liability doesn't arise for that particular period. The writ petition was disposed in the favor of the petitioner on that ground. Next, RP Techsoft International Private Limited versus Deputy Commissioner of Revenue 2025, Calcutta High Court, date of order 23rd July 2025. Let's understand facts and issue of the case. The petitioner claimed transitional input tax credit under the repealed law after the decision of Union of India versus Philco Trade Center Private Limited 2022, and in terms of circular number 18012 2022 GST dated 9th September 2022. The state tax authority denied the claims solely relying on a verification report submitted by the Central Tax Authority without independently analyzing the petitioner's submissions. Very important. So issue was whether denial of transitional credit by the adjudicating authority based solely on a counterpart authority's verification report and without independent evaluation and rebuttal is permissible under the statute and principles of natural justice or not. Let's see what Calcutta High Court observed and held. The court noted that while verification by the counterpart authority is relevant, the adjudicating authority cannot blindly on that particular report without affording the assessee opportunity to respond and must make an independent evaluation. Means it need to be done by that authority. The court allowed the petition, quashed the impugned order, and remanded the matter back to the authority to fresh adjudication after giving the petitioner an opportunity of hearing and independent consideration of objections. Next, JT Steel Traders versus State of UP 2025, Allahabad High Court, date of order 28th July 2025. Relevant sections are section 73, 74, and 130 of CGST Act 2017. Let's understand facts and issue of the case. The petitioner, a registered dealer in steel, was subject to a survey at its premises where authorities claimed excess stock using eye estimation, no actual weighing. The department initiated proceedings under Section 130 of the CGST Act, confiscation and penalty, rather than under Section 73 or 74, adjudication for tax or ITC. So issue was whether proceedings under Section 130 of the Act can be initiated merely because excess stock was found during survey without actual weighment, or whether proceedings under 73 or 74 should have been invoked. Let's see what Allahabad High Court observed and held. The court reiterated that Section 130 is meant for cases where goods or conveyances are subject to confiscation or penalty for contravention or intent to evade tax and cannot be used as substitute for assessment of tax under section 73 or 74. The court found that initiating section 130 proceedings on the basis of I estimated excess stock was legally impermissible. The impugn orders invoking section 130 were quashed. The matter was directed to be re-adjudicated under the correct provisions, that is section 73 or 74 if required. Next, Shyamaraju and Company India Private Limited versus Deputy Commissioner of Commercial Taxes Audit 2025, Karnataka High Court, date of order 18th July 2025. Let's understand facts and issue of the case. The petitioner, that is landowner, entered into a joint development agreement with a developer. The developer discharged its GST liability on the entire property, including the landowner's share. Subsequently, the tax department demanded GST from whom the landowner as well, taking a contradictory stand that no development rights had transferred to the developer because JDA was unregistered. So, issue was whether the landowner can be held liable for GST when the developer has already discharged the GST liability for the entire property, including landowner's shares, especially when the department accepted that arrangement earlier. Let's see what Karnataka High Court observed and held. The court held that once the department had accepted the joint development agreement arrangement and the developer had paid GST on the entire property, means once the court accepted that JD arrangement and also the developer paid the GST on the entire property, including landowner share, it will amount to double taxation to demand the same from the landowner. The department cannot take diametrically opposite stand in respect of the sorry for the interruption. The department cannot take diametrically opposite stand in respect of the same transaction given its earlier acceptance. Sorry. So, the demand for GST from the landowner was quashed. The adjudication order against the landowner was set aside. What court held is that once the department accepted the JD arrangement and the developer had paid the GST on entire property, then demanding the tax with a double taxation, the department cannot take diametrically opposite stand in respect of the same transaction, given its earlier acceptance. So the demand for GST from the landowner was quashed. The adjudication order against the landowner was set aside. Next, Rebekah Metals versus Deputy Commercial Tax Officer 2025, Madras High Court, date of order 22nd July 2025. Relevant sections are 73, 169 of the CGST Act 2017. Let's understand facts and issue of the case. Notices or communications in respect of audit or assessment proceedings were uploaded on the GST Common Portal. The petitioner claimed they were unaware of the notices, didn't respond, and no further mode of service was explored by the tax authority. Very, very interesting. So, the tax authority passed an order under section 73 without providing personal hearing to the petitioner. So, issue was whether service of notice exclusively via portal upload without following alternative prescribed modes when taxpayer doesn't respond and without personal hearing is sufficient compliance with principles of natural justice under section 169 of the CGST Act. Very, very interesting. So let's see what Madras High Court observed and held. While portal upload is a valid mode of service, portal upload is of course valid mode of service. The court held that if no response is received, the authority must explore the alternative methods such as RPAD as prescribed under section 169 subsection 1. Merely issuing ex parte order by repeated reminders without exploring other modes of mode amounts to what invalid service and violation of natural justice. So the impugn order was set aside. The matter was remanded for fresh consideration with a fresh notice, personal hearing, and proper service to the petitioner. So that's it for today. Let's see conclusions drawn from the cases discussed above. So, first, once a charge sheet is filed and bail is granted, it cannot be recalled unless clear evidence exists of risk of absconding, tampering, or influencing witnesses. That is a tri test, trimeter test. No interest is payable on GST if tax is already credited into the electronic cash ledger before the due date, even if the return is filed late due to technical issues. Denial of transitional ITC based solely on another authority's report without independent evaluation violates what? Natural justice and is unsustainable. Mere finding of excess stock during a survey cannot trigger confiscation under Section 130. Correct proceedings lie under Section 73 or 74. When a developer has discharged GST on the entire GDA transaction, demanding tax again from the landowner amounts to what double taxation and is impermissible. Uploading notices only on the GST portal without ensuring effective service or personal hearing breaches Section 169 and natural justice principle. So that's it for today. Please note down my contact numbers. If you have any queries, observations, suggestions, then please do let me know. Hope all these video series which I'm conducting on Tax Video YouTube channel are valuable to you and you are learning and learning, getting learn from this all these video series. So be connected with the Tax Video YouTube channel. If you are not yet subscribed, then do subscribe Tax Video YouTube channel for latest updates and do connected with us. So that's it for today. Happy learning. Thank you so much. Bye bye. Take care. See you soon. Hare Krishna.